everybody, we're back on a Monday. Much to get to, many immediate things that have occurred over the weekend we need to address. Obvious thing, the whole HSI back in the zone check back, is that failing? Are we failing where we should be checking back? We're going to look at all of it. Harmonic strength index, the primary harmonic pattern indicator for what we use with all harmonic patterns as our trigger, confirmation methodology, just even a basic directional harmonic understanding. It is proprietary, but I think anybody that has spent more than a few minutes with the program see how this thing can help us guide executions, actionability of opportunities, and optimize positions. What are we going to do? Is this market going to fall out? Is it going to do the big drop? Still needs a lot of time. And in fact, what we're looking for is a positive check back. We're looking for that, a successful positive check back within this larger zone. As here's Bitcoin futures. All of that, of what we're looking at as the bottom range of support within that zone, is 20,866 on the futures. I think the futures chart helps to smooth out the overall action, but I think it's clear. And I'll be the first to say it, the bigger collapse, if you break down under the hop level, we fail here. Okay, then no problem. There's still going to be plenty of time, because the next leg would eventually get you to the big breakdown that we've talked about. If there's going to be zero reaction here, it fails, closes under the hop level 9,416. Yeah, it's real close. I'm looking for something, a single bar development, a breakout, individual candle, green candle. Maybe that comes today, first candle after the check back, which was Friday, but it looks like garbage. It certainly does. Hey, what's going on in the chat? Shout out to everybody. How did everyone like Thursday? We gave away a bunch of books. Our good friend Evan. Hey, Evan, what's happening? You won that 90-day software. I hope you got hooked up. You do need to reach out to support. Make sure, let me know if there's any issues. And everyone else that's here today, thanks for showing up. We're here Monday, Tuesday, and Thursday, 12 noon. Every Thursday, we give away some books, and, maybe I'll start giving away a software too. Just give people opportunity to get to it. But now it's where we need to really basically say this is it. I said this on Thursday. We're facing a make or break on this check back. Can't fail. Can't fail. Cannot fail. I think you have to look at the whole bullish scenario of what this pattern has meant over the last 6 months. This big crab pattern, not only has it served as a secondary kind of downside target level of basically got us thinking about 25.5 when it started to develop, but the hop level on a crab pattern, if this was any other market, any market at all, it's pretty clear. If this is not a delayed confirmation where you do something in, say, the next 3 days, yeah, you'll get that major breakdown. A lot more significant than what's happened over the last 3 months. Not easy, folks. And some of your other coins and Ethereum took it in the nose. Here's Bitcoin. Let's stick on Bitcoin for a minute, because it's been a dud. And if this is a dud that's not even going to respond to its own daily HSI checkback, that's what that arrow is. That's really what we're addressing today, is this arrow that showed up last week. That's Harmonic Strength Index on a daily across basically every data platform. That relates to this indicator. This is Harmonic Strength Index on the bottom. Okay, real directional. Harmonic strength tries to measure the extreme overbought, oversold condition. And until the way you look at it is until it can make it back to the other extreme, that should dominate your price action. The price action can go sideways and be kind of a harmonic dud, as we say, but at least grind a little higher. Something. The major development that happened over the weekend was with Bitcoin and a lot of cryptos. You went back into the amplified zone. You're trying to come back out now. That's it. From a indicator perspective for any strength here, it has to come out now, which means your lows and any closing under anything under 18.8 is not good. Look at all the lows. This is FTX feed. You have not closed essentially above under 19.3 for Bitcoin, and that would be a larger confirmation failure of everything here. Let's just look at the pattern. We had a big crab pattern, and it's essentially the big 1618 extension off of last year's run to the prior peak, which also had a butterfly. Got a couple back-to-back long-term pattern dynamics happening. There's the butterfly. Just had a real nice ABCD right to the top. And then we went from September to the November peak. Amazing that was still only November. And here we are. Big, deep crab. Everything is there from a pattern perspective. I mean, it's your X. That's your X to A. I should turn on the labels. That's your B point in an 886. And then you get this creature that is a 1618 extension down here, which came in at 21.2. And this is it's tough to see, but this B to C move, that's a 314. So all your numbers between 21 and essentially 23. And you're now back to skirting 20,000 with an arrow that's supposed to hold. You have an arrow, this HSI arrow, secondary arrow. So maybe Bitcoin's moving in slow motion, but it's certainly hitting the limit. You can't. You're already threatening to fail this check back, and that check back is this arrow prior low. All that's around 20,008, 20,900, and you're 20,350. So you need to see something. There's really close under these lows, and then from a pattern perspective, I would say go to the hop. Because if you can't hold here, or again, the other thing is amplified. Don't know it yet. It's something. It's a wait and see. But amplified has to come out of that zone where amplified RSI. Think of it as an accelerated RSI, and I'll bring up the. We have standard RSI on the futures on the other platform. I'll show you. So you're there, and it's. In most other situations, I would say, hey, that's fairly constructive. You have a couple of secondary readings on the recent retest of that indicator. Price never really did follow through after that initial flush. I mean, it's still down, but you're not making new lows. And the futures managed to hold somehow. But the absolutes here are, I think, undeniable. And that's you get a close under this whole range. And that's, I think, anything under 19,000, then you got trouble to saying maybe this thing is going to just ride this downtrend until we get to the 886 this year. Because if you can't check back, hold here, you've got a lot of things going on. There's even from a weekly. And I'll highlight how this works. I mean, we've had a number of bullish readings. This is Bitcoin on FTX. I probably could get a better feed than that. Bitfinex, or yeah, and there's the patterns from 2020. But even if we're just looking at HSI, Harmonic Strength Index, it's failed. When it fails, it's pretty obvious. There's the last failure. Here's some examples of where that bullish reading works. I think it still comes back maybe less than here. You're taking a couple of, even in the best of markets, it still required several weeks to retest. Maybe that's what's going on here, but I also want to say that any kind of demonstrative breakdown, you're screwed. I mean, that would be then just triggering continuation down to whatever, the 11,000 now, if you don't hold. Pretty crazy what's going on. Pretty hairy if you're following your RSI indicator. And again, I think this is the best. It's going to be the best representation of what's going on from a relative strength perspective, just because the way we have kind of just sped up the RSI indicator with some other harmonic variables that mimics what's going on from relative strength perspective, but shows us that there's some action here in terms of RSI trying to stabilize, but only if it busts up now. And you've got a lot of overhead resistance at the moment. More time at a minimum is probably the most optimistic thing I can say. That's going to take more time. It's so close, folks. The markets as well. NASDAQ, we'll get to that in a second. It's been all over the place. I see it's back to even now. Was plus 100, down a couple hundred. This is where it gets real crazy. We've got to stick to the framework. I still want to look at all the long-term patterns you have. Here's Bitcoin on the daily. Yeah, it too has this deep crab pattern. So the read is this check back secondary in the zone. You don't hold that, then you go to the hop. And how many times do we see that go to the hop? You're fighting a downtrend that you just can't get above. So looking at a couple other things, we looked at Binance. And remember some of the type 1 reaction patterns? Binance had it. Small bearish pattern in the larger bullish zone. Well, it did a check back. Here you go. That's relatively a little bit better. And again, it's so close that for Binance Coin, I'm surprised it didn't come down to target 1, which is basically 256. That was what we were saying last week. And register HSI. Then instead of doing it here, wish it was there. So we're still underneath the downtrend, and I think BNB is still the one where if it's going to roll over and show you that it's going to go into a full type 1 reaction, yeah, the rest of the market will take it down. It'll show you it more so than Bitcoin will. But now we're faced with a bullish HSI against the bearish pattern. It takes more time. We look for it like that. Trying to check back. But all of these lows, like under 270 for Binance Coin, that sets the market down another leg. And then, of course, Ethereum. So Ethereum's big check back. Trying to against this type 1 reaction. Okay, right around, what was it? 20, was that really at the 113? Around, right at, pretty close to the high. But type 1 reaction, that has to be over. Why? Because you've hit the target, you registered HSI. And again, dipping down lower than we want to see, but essentially you need to see the breakout of the downtrend and for the retest. If this type 1 reaction is going to end here, I'm not saying it is. It's got to do things now, and it's got to break out above essentially 1600 if we're going to go into the type 2 return to retest for the larger reversal or what have you. Just laying out framework, just laying out harmonic pattern framework here, folks. Follow along, but it's not, it's certainly out of time. There's really no waiting on this beyond today has to be a bullish candle, tomorrow has to be a bullish candle to set that return phase back in. Otherwise, it'll just ride the downtrend. And that downtrend, this is something to take note of, and I'll go to some reference material in a second. I'll show you a few illustrations, but one of the primary things that ends the reaction, of course, hitting target 1, but for the real return phase, if you break out of the downtrend, in most cases, that's when the whole thing's over. Because if you break out of the clear downtrend and you start head back for the retest, that's with a pattern, that's what we expect. So reaction phase, is it over today? It has to be. This reaction phase has to be over, or and larger markets puking like they did on Friday. If that continues, then I think it'll just be a collective pressure on all of this. Still think there's massive opportunities down here, but at what level? What price? Is 680 going to get hit someday? Maybe. I just still think we're in a type 1 reaction off of all these bullish patterns. But if they're going to fail, or they're going to print bearish patterns that puke, which is what they're doing, excuse me, but that's what this says to me, that it's either more time, in which case you wait for the breakout or wait for the clear positive turnaround with confirmation. If there's not going to be a return after that reaction and we go straight down, you probably failed yesterday's 2 days lows. Here's the other aspect of the larger crypto sphere. Okay, I want to see it end today. Like it has to, these reactions, they've got the check back. So they got everything that we look for in a type 1 move. Pretty strong, no follow through, and then fails the downtrend. So here's total 2. I talked a lot about these total 2 and 3 and DeFi indices as something to really follow, because these were the arrows from last week. And so here we're at check back phase, which is 579 billion. You go down over the weekend to 550. Okay, yeah, and it's weekend action where you can get knuckleheads to run it a little bit over the lines, which okay, that makes sense. But your check back, your first positive candle is today, has to be. We need at least one candle positive to get to go back into the return phase, but we still also have to break out of that downtrend. I don't want to see this thing roll over. So probably in the next 24 hours, I want to see HSI bust higher above the 50 level in the prior readings, and I have to see price action continue into tonight and tomorrow, where amplified goes to 50 or 52. Then you will have one secondary confirmation, if not divergence, to say that reaction phase is over. If you don't know about reaction reversal dynamics, stuff like that, listen, go to Harmonic Trader, become a basic member, just register now. And let me just show everybody. So again, the software, we give away the 2-week free trial. Everyone, please send your TradingView username to hpc@sr-analyst.com. And don't be afraid to try one of the HPC Pro platforms as well. Those are free 14-day trial too. You can try them all, but just try them once, please. I think if you got the bucks, get the eSignal version. That's got everything, and the data is by far the best data. eSignal has the best data in the industry. That's why I run it. MetaTrader is probably a more economical option, but it's got everything. Now, go to the books and at your convenience, download them. But you want to go to volume 3 for all of this 1, 2, type 1, type 2 material. Scroll down. I think it's about halfway down, 2/3 of the way down. But the whole type 1, type 2 reaction reversal dynamics is critical to understand that also relates to looking for multiple tests of RSI. That's, here's an example of something like that where we're looking for 2 larger signals. And then let me find the type 1, type 2. Where'd that go? Let me go back to there. Because understanding that reaction reversal has a lot to do with understanding what you can expect from major patterns. There's one illustration. What's that page? Yeah, break down to like page about midway through the book, 170, 168. And check out just some of these illustrations and flip through the examples. And we're looking for reactions on the first test and pretty, exhibiting that kind of behavior. But then we look for the retest and look for, secondary confirmation behavior where you have larger things. I'm going to get into a couple of stocks today that will be, above and beyond the 3 ideas that I'm putting out for gold members. But again, we're going to talk about why these zones need to have that confirmation. And we're there. I mean, here's the confirmation. Think of it this way. We know we have all the long-term patterns. Here's the crypto index. The first reaction off of that big zone, off the crab, started June 21st. All right, then we went and formed this small bat pattern reaction within the whole framework of just considering that small bearish pattern. Has to end today. Okay, otherwise, is this going to be a straight on type 1 dunk collapse? Not there yet. You've got a few things here that are on the daily time frame, especially this secondary reading. But price action has to follow through literally in the next 24 hours, or it will, or this thing will just continue to ride down deeper into the larger zones. And that's surprising. Here's that total 3 without BTC and Ethereum. Same deal. Here's 1 or 2. Let me see here. Let me go to. Here's something we've talked about for a long time. It's a real T coin, but it's followed, and there you are. You're back for the type 2 move, which is, we were talking about anchor, complete speculation to target 1, and you did a crazy thrust up to target 1, terminated. And I kept saying, look for the retest. And now the retest has an HSI. Okay, your primary number, this 1618 from the deep crab, that's at 3.7 cents with the terminal bar. That's where the completion point is, down around 3 cents. But now we're retesting it, high level HSI right at that 3.7. For me, that's critical. If I'm, despite all the fears and all the garbage and noise going on, that's exactly how we read that pattern set up over the last 2 months. And so now we're here with a secondary retest with confirmation. What are we doing? Are we buying? Maybe. Or are we sitting on our hands? Expecting this to do a type 2. Now, It's okay on the secondary retest to take more time, but I think this is something where we've traced this out where, hey, type 1 reaction, come back down, type 2, wouldn't be surprised to see that happen. And maybe later this year. I mean, there's a lot of things I've kind of repeated. So now it's here. That's how critical it is, and it's checking back. I need to see 1, 2, 3 days bullish candles. If not, and it keeps rolling over, then it's going to take a lot more time. But it's at that point. I need to go back and look exactly when we really first brought this one up. I mean, maybe it was around June, late June or early July, because it had some of the delayed confirmation that we've talked about in a few other T coins like Chili's and Crypto.com. Notice Chili's more than doubled or tripled, and Crypto.com did like a 40% move and then went back. Here's Crypto.com. Yep, look, there's the big pattern. It's a big bat. I know this is also a weekly, but it's a big bat. And okay, yeah, here's where first confirmation was all the way down here around 9.8, 10 cents. Here's the second confirmation with a small little ABCD pattern that the software generated. But again, HSI, just focus on that arrow, because that's the second level on the daily chart, second time you've had confirmation. Go on the even Coinbase. Coinbase doesn't have the pattern. I don't, again, I'm not going to get into the data differences. Just stick with the big ones. But okay, you had the signal, secondary test, check back 12.7. You're still 12.2. You traded almost 10 over the weekend, I think, or down to 11. Yeah, 11.5 or something. It was crazy low. This is, for all of these, you need to see immediate reversal behavior here. And I think you can look at the prior HSI signal right there from, guess what, the 17th to the 21st. Yep. You registered, spent 2 days checking back. Look at that. You actually did kind of a almost 30 days later. All right. I mean, listen, certainly when you're here and you have a check back, once that happens, you're tightening up all stops. I mean, you don't want to see this underneath these lows or going under the hop at 9.1 cent when you're at 10 cents, 10.7. Same deal here, but just a slight touch higher. You're at these current lows. You don't want to see it under 11 cents, essentially. The HSI arrow, like you're a 14-year-old. Okay, like you're my 4-year-old, soon to be 4-year-old. Here is the arrow. Is the arrow, you can set this, is arrow pointing up or pointing down? It's pointing up. Up means we look for it to go up. But it's an early signal. It's related to this bottom indicator, harmonic strength index, or we just call it HSI. But the arrow will only trigger when it comes out of the extreme. All right, that's critical. We're not looking for it down. I mean, you can, but we want to wait for the signal to trigger. Why? Most instances, what we then wait for is it's just a simple little divergence move where it comes back and retests that prior low, much like it did here. Doesn't happen in every instance. We're also wanting to combine it with patterns, all right, and pattern levels. But it establishes a floor. The arrow goes on, it establishes a floor. It likes to retest that, but that's it. There's no more time, no more, and there's really not much on there. Listen, the best place to go, really quick, just to do a quick rundown. There is a lot of information about harmonic strength index in volume 3 as well. Just the basics. And then I've got videos on the basic members website, but it's stuff that we look for, um, basic overbought, oversold, and the check back also deals with, let me try to find that. The check back is some of the, I think there's been some more advanced interpretations that I provided in some of those videos, but the basics are here. And what's that? Page 280 on volume 3. I lay it out. There you go. But again, we're looking for the basic lineup of overbought or oversold with a pattern zone. And you can look at things independently as well. I mean, there's definitely a lot of helpful signals when it's going with the trend, but I prefer to kind of present it with the patterns. All right, back to the chart. Look, I'll wrap it up with this Bitcoin chart and Bitcoin futures because it's been smoother. If this is a delayed confirmation, which it has to be, it's already starting to bleed out. It has to turn around. I mean, we would let this be a nice little island reversal or something here. But you're already threatening to take out. It took out yesterday's or Friday's low. Gap down. You would need today's low would have to be pretty much it. And then of course, if we're going to go off the pattern and use the hop level, which we are, and it has been respecting since June, that's your maximum before the larger ugly scenario. Probably depends on how bad the markets do start to fall apart here. If they can't do anything today, we should look at that. But for what we're looking at is essentially pattern structures, relative strength measures to define those critical points. The larger scenario of, say, look at the Bitcoin futures on a weekly. Same goes for like BTC, the GBTC. If they're going to come back and maybe do some kind of larger retest of this big 886, which is, essentially what that's all that is. Underneath where you are currently of 19.4, there's only, from a pure metric, it's only that 10,800, 11,300, depending on your exact measurement. You're going to pull it off the COVID low or go even lower. You can go all time. There's the COVID low, and that's like 11.8. That's it. There's nothing below there. So if you're going to fail there, shouldn't you do it in violent fashion really soon? Is that it? We've got some signals here that I'll stick with the signals, but I would, carefully, I'd be patient. Let it give you something. And again, I don't like. Here's the 4-hour chart. I thought this was kind of interesting on your futures. Little bullish shark. So that just helps to reinforce of how critical that 19.4 level is, and not to mention today's gap down on the open. And this should be some kind of, it would have to be some kind of island reversal or reaction now. That's how close it is. That's like you're sitting on the edge. So quickly, let's go look at beautiful tech stocks. NASDAQ 100, whatever. Because it's, all we really need is the daily. We know we have some patterns. It's not the prettiest, but let me clean it up. And let me just take out the ABCD. Because the crab off the top is still relevant. It's kind of like what we saw in Bitcoin. Most of these have done something at their 1618s. There you go. But it's ugly. here is, let me highlight this. So this is a daily chart, NASDAQ futures. And this pattern, essentially, you start off the October low to the, what was that, December peak. And that gives you just a 1618. So think of this whole decline as you had your impulse move to the top is a 1618 extension, throwdown rally, a throwdown decline, hitting your hop level, which basically your 2.0 level, but saying if this is just going to be the one extreme throwdown move, and it's a measured move. I mean, that's quite measurable. Where this is the most important segment. Think of it that way. It's all contained within this 1618 2.0 range. Now, we talked about this kind of overshot. Depending on the market. Okay, some of your techs did have this small pattern like we saw in crypto. Still, type 1 reaction move to 20,075. Currently 20,513. So 500 more points to the downside on that reaction. But you have to generate HSI. You have to generate oversold RSI. Here's what that looks like. Okay, so Harmonic Strength Index is going to register a bullish reading today. And that's just a starting point, but it's important to take note of what does that mean from Friday's decline. Was Friday's a one-off? It was quite a throwdown, let out a lot of steam, and you could have a counter trend rally, but wait on it. Okay, it hasn't registered yet. Probably by tomorrow it'll register. And here's your standard RSI. That's available on the pro platforms where we have the RSI BAM strategies built into standard RSI. We use it primarily on amplified, but you've got all three for the pro platforms. But okay, clearly trending, maybe needs to do a retest of some of these prior lows down in the 30s. Haven't been oversold in standard on the daily RSI since February. But a secondary reading, if this thing dropped really hard and got a 30 reading and was above that prior low, that would be, I think, something to look out for. Because a lot of these are doing the retest where if you're going to retest the June lows, you're probably going to retest the deeper numbers in these pattern ranges. So if go back to the hop level at 11,848, we know target 1 is at 12,075. I'd be looking between those two ranges. Maybe like that. And so NASDAQ futures looks like Tesla. Or Tesla looks like NASDAQ futures. And we looked at a couple of the dynamics. We have a few patterns there. But clearly, deep crab, I think there was a bat pattern on maybe it was a weekly as well. Yeah, the weekly, it looks like this for Tesla, okay? It's a beautiful bat pattern, but it's a type 1. And it looks like that reaction's over. I mean, trend line getting violated. 3-bar reversal yet? I mean, because then that would set it off for the retest. So that's Tesla. That's everybody's favorite. They already did the split. Obviously, the split's not going to run the stock. It was already priced into the stock. This is a weekly. And it's a beautiful pattern for Tesla. But we know the type 2 reversal comes on the retest. And that 886 is all the way down at 208. Another day lower. You violate, say, 280, close below 280, that should set you into the full return mode. Thank you, Mr. Bogus. Mr. Bogus is saying he runs the HPC Pro for Sierra charts for 350 FTSE stocks. Nice, on the short list on your on the monitor. Yep, great. I mean, it works in all markets, all time frames. I just say stick with your most liquid markets. But this Tesla on the weekly, if we're going into a type 2 return and you have a daily, oh, I think on the TradingView platform, it has a bat pattern. Doesn't matter. Pretty clear pattern dynamics going on here. Let me bring up there you go. So certainly some challenges. Certainly when you look at stuff like this rolling over, going into say a type 2, sorry, yeah, type 2 return on Q, then they've got a ways to go. Here's Tesla. Tesla had a butterfly. I don't know why that. Maybe it's a little slight data. Doesn't matter. The bigger news on Tesla here is the fact that even on the daily, you had it on the weekly, daily. It's a type 1. A type 1 reaction that started back in May generated a really critical HSI at 306, and again, we don't, that would set this into a full type 2 return even on the daily, which is about 233. The back-to-back pattern dynamics, even if we're going to follow what we've seen in crypto where they should go to a type 1, let's just say we're not even looking at the prior pattern. We're just going to look at the immediate bearish pattern. The type 1 reaction targets still lower, 253 on Tesla. And look at the HSI. Here's Harmonic Strength Index. Trending down. So that's where we are in the framework. I think it's important to note that, and note as well what Tesla just did on Friday. So there's the 50 level on your amplified RSI. This is about as clear of a breakdown as you can get, where until that can hit an oversold, HSI can register. And we're having this, we had a 3-bar breakdown today. So a close pretty much under Friday's close, under 287, sets that off, even with a bullish candle. That 253 is your target one. It's probably the challenge here of why crypto is, even if crypto is as oversold as it is, it's going to be tough to do major things unless the markets come back and retest the June lows or whatever patterns are down there at the June lows. And that's, Tesla, its major pattern again is around 230. The weekly structure, which is probably the more dominant time frame, as we see again when we have weekly patterns, those are usually the levels you want to stick to, even over daily. So 886 at 208.79, I wouldn't be surprised if we get some kind of flush now. And I say now because you're threatening the 3-bar breakdown exactly where the type 2 return, meaning first pattern, first completion, reaction goes to the target 1. Tries to blast through, cannot follow through. Spends 3 weeks going sideways. Then Friday we tried to roll over. The 3-bar reversal on Tesla is official with a close under 279.60. That would really set it back lower. But you're stalling at target 1, which is really common. We see that all the time. And there's a few other ones I'll show you that that's what's going on here. We're retesting these having to retest these zones from June. Check that out. Let's look. So SPY. Oh, here's the SPY. Here's the SPY. Because the SPY had the same overshoot pattern going into reaction mode. So, and down today, not like a massive reaction or response. You did have a high level HSI, which has failed. I mean, really, it's It's well below where you want to see it. And your targets are 393. I think this is something we drew on Thursday. And then going back on what are the patterns down here? There was a shark pattern. Okay, you got to target 1 on the shark. Was that? Was it almost right on? 431.73. Target 1 was 432.56. Really close. I would say that because the shark becomes a 5-0, there's things here that I would say that's successful type 1. And if that is, then you come back to shark level at 372. Minimum 393, and let's take it in chunks. Off that bat pattern, you come back down. Target 1 puts you 394, 393.84. So we treat this as a reaction for the next few days. I wouldn't be surprised to see that come in by Thursday or Friday down as low as target 1 and just finish the week in an ugly manner. Here's your weekly. With a weekly HSI did register last week. Not always a great thing. So I think you take out the lows from today and you keep going lower. This really, your other obvious levels are back down at the June, July area. Even, early August, we were trying to come out of that zone. But if that's reaction, we go into the return phase. You basically, even if today's, let's just see it come back tomorrow here. See where that is. Because I would expect the continuation and go down to target 1. What's going on here? Big shout out to the chat. Thanks everybody for being patient and everything else. Let's keep it cool. Okay, cool. Thank you. Get to really quickly crude oil. Because crude is starting to pop up off of the daily levels. Making progress. Actually, stuff like ExxonMobil's up big today. Hold on. And natural gas, is that going to break out instead of rolling over in the $9 zone? Continuous crude futures. We're looking at that chart now, and it's a shark. Can be quite reactive once it busts out, and this is why we were looking at last week. You had the check back. When was that? The 22nd. Now you're breaking out, and looks like you're going to do a follow-through 3-day breakout. There's your first one in the zone, underneath the zone. Today, you close anywhere above 96, 95.80. That'll be another 3-bar breakout where there's nothing but 107 in its sights. Let's draw some trend lines. Making nice progress out of the trend. This is another example of a delayed confirmation. Pattern completed all the way here early July. Confirmation didn't come in until, like we said, last week. Check back last week at 87. Now 96. You're going into reaction mode. If we take off the bullish pattern, check this out. Okay, let's just look at it compared to this prior butterfly on the daily. Strong reaction down, well past target 2. Okay. Your trade probably terminates there at about 105, but this thing went to 83. But still a reaction, and not crazy to think that this would retest that pattern zone, what we call a looping retest. So you take away that bullish pattern, bang. How would we look at this from if it's just take away the bearish, and we put in just the bullish. It's still, we go up to a type 1 in a reaction mode, 107, and then look for the retest. Now, with that kind of a pattern that developed off the August correction, July correction, this kind of subsequent reaction reversal set up, if we're going to get massive prices, a lot of people are looking for crude oil to go much, much higher. I would still be inclined to see it kind of go through the reaction reversal phase where you do some kind of retest of the prior lows and then you go. But for now, reaction most likely off of that shark gets you to well above 100. That's just a general sketch of what to expect. I mean, we've seen that too, with the larger markets having that kind of still running against the downtrend line. Here's nat gas. Look, we've said for a long time, $6 on the downside support, 9 on the top side. You're 937 today, 950. This is what I'm looking at. We're going to ride this, or we're going to break it down. Certainly really tight to that uptrend, where if it's going to go and then do the breakout, as I said last week, the weekly numbers, the weekly patterns are much larger. You know, $15 level. I mean, there's really not even worried about $10. It's just when that shows its hand and starts going above 10, there's nothing between 10 and 15. But does it pull back $2 before it does that? Because it very well could go like this, doink, and then go. Just beware. It's lagging at a place where this should be blasting through. Just as a side note, because I had some experience with this market, they would be looking for a hurricane to develop, something in the Gulf. Would send it higher typically this time of year, but there's been 0 storms, been 0 hurricanes, nothing. And if this rolls over, you know, you could get a flash down and get a much better opportunity, maybe at 8. It's kind of what I'm thinking, where you could spend time here, spend weeks up here, but set something up for maybe the winter. It's going to be really interesting. The European prices are just unimaginable. And I really don't know how that's going to play out. I really don't. And those prices could collapse. Some of the European prices. I'm bringing them up tomorrow. I don't want to go fishing on that data, but tomorrow we'll look at that. It's really maybe some of you folks from Europe are in here could chime in on your energy bills lately. I wouldn't really want to be there right now. Sorry. Anyway, keep an eye on that. Also, here's that UNG thing. UNG and Boyle, right? Boyle's 120. But here's UNG, weekly crab pattern off the low. You know, 3278, it's the 1618. It's stalling. That's why I'm not there yet. Here's Boyle. I know some of you folks are still holding on to Boyle. Done well with it. Yeah, there's larger targets. Boyle's something I've put a lot of people in well before they even knew Boyle existed. The thing with Boyle, I think it's time. There's the monthly on Boyle. No, that's not the monthly. We want, we want the weekly. Weekly and daily on Boyle, because this thing is so volatile. I think the daily was the crab or the bat. Yeah, the bat at 34. That's what we started looking at it. And even this one did the reaction amazingly. I mean, the first move went from 34 to, what was that, 130? But 78 was your first target, and then came all the way back down. And check this out. Looping type 2. It retested that Gartley at 50 bucks. Yes, you can do it that way. You should do it that way because really by there, that's the official point of where the type 2 begins. And also note trend line on even a crazy reaction like that. But Boyle, it looks kind of toppy to me. Be careful. And again, plenty of time. The thing with the energy trade is that it's, I think we need to give it a little more time before we're going to look for a breakout in it. Some of the stuff like XLE or ExxonMobil, Chevron, they're just grinding higher, trying to retest those highs. But yeah, XLE's got a big bat pattern, which, all right, maybe that you play that up higher to like it is on the Shark, up to about $90. If that's what the software is showing. I find that pretty interesting. Chevron, probably it's my preferred of the two. What's that doing? Nothing really on the daily. I think this was hold on. Wasn't this a weekly deal? Yeah, it was a shark back, the 2020 COVID low, but um, maybe it was ExxonMobil. Still quite strong. I mean, on the as high as that looks, you did generate a weekly bullish continuation. Probably go fill the gap at 175. There's 10 bucks more. I think ExxonMobil's the Gartley retest. Hold on. Yeah, it's there you go. So ExxonMobil did hit the deep crab today, 100.93. And your prior terminal bar, all of that, pretty interesting. 103.43, maybe a hop at 107. The only thing you would be looking for is HSI now. I mean, here's why it's probably going to go higher until it returns. There's the hop level at 107.52. You would need to see an arrow somewhere in here develop, like you did over there, or even there. I mean, hey, more time, more time. And here's HSI. HSI is still overbought, so you'd have to give that a couple more days. I mean, it's not. It would have to do something like that. 103.43. Yeah, maybe we do go higher for now into these zones, and then probably take until next week to trigger. That's early. That's a definite example of an early setup for type 2, and why even on type 2 moves, look, you're not even going to get anything until the trend line is violated and you get a couple bearish signals. So that rides straight into the zone over the next few days. Scott, I think as long as the DXY goes up, crypto and other risk assets are not going to be bullish. Probably with this DXY, and an inverted yield curve doesn't help either. And an inverted yield curve where the 2-year is well above the 10-year, that has to change. Here's DXY, folks. Remember, we had some pretty just monstrous monthly harmonics going on DXY. There's your monthly DXY chart. 106.15 is the hop level for the type 2. I mean, your first hop level retest. We could say that there was, that was almost a perfect type 1. This could be a type 2, but you have a tertiary test here. Listen, the reason why you don't have a signal yet on that retest to say that is bearish, or you would even consider that as bearish, is because you need a harmonic strength index. And harmonic strength index, here you go again. This is why we look for harmonic strength index to signal out. And until it does, it rides it. It just continues in the trend. And that's a monthly chart. So we're not getting out of there this month. We're not getting out of there next month. You'd have to do a massive rollover to do so. Your signal is 112.20. You need to get below 88.6. That's dollar index. That's amazing. We've been so used to a weak dollar that it kind of crept up on people finally in the last year, 18 months, where the larger dynamics have taken shape. Do look at what we have. I mean, even on a monthly basis for uh, dollar index. Okay. I mean, this is how we look for termination of, say, some reaction. Hits your zone, goes to at least target one, and generates HSI. Whether it checks back or not, that's a whole nother discussion. But look, that's a typical harmonic pattern move, and that's a monthly over 2 years. Final bit, notice even on the monthly, when you break the downtrend line, reaction's over. That's how to treat it. Same with up here. That was a crazy candle, that 2020 COVID candle. Okay, but again, that COVID reaction, once that COVID reaction was over with the trend line, I mean, take that immediate trend line, and you had HSI. Reaction over. Those are the signs to look for. That's what we try to apply within the framework at every bit. This sets off the return. And in the same way we're looking at like Tesla to retest its bullish pattern, this set it off to retest the bearish levels. And you blew right through. So dollar index, until you can break that uptrend line, until you can generate some kind of arrow that says HSI has come out of the zone, no, you're not going to do. You're going to keep going higher. And the only other level, we talked about this last week, is this immediate kind of century, this 21st century 886, if you want to call it something like that, at 115.93, which 700 pips higher. Something like that. I mean, you could go way back dollar index. Actually, you'd be surprised how depressed the dollar truly is. It's really just talking about the last 30, 40 years of massive devaluation. But wouldn't be surprised to see it go as high as 115. Just plant that in your head. Doesn't matter. You need one bearish candle, monthly bearish candle. That's all you need. That would end this crazy run that started post-COVID. But you need a bearish candle. And until you got that, maybe you're 3 months away. Crazy. Here's the other thing that kind of the macro, on a macro level, why is this all happening? Why now? Why is it breaking down? We see a lot of bullish patterns from a harmonic basis that have registered their type 2 returns. They're going to go back and retest the patterns that developed in June and July, did the reaction, ran right into target one, and then now doing the retest. But major kind of macro things that are, larger people look at it's stuff like the fact that the 10-year and the 2-year are inverted. And we looked at this last week. I just wanted to bring this up. You had this small ABCD pattern at about basically 3.43%. Is this going to be something that caps it? Not until amplified rolls over. You are well above the 50 line on all of this. Maybe we could pause here, but there's still a lot of time before that even gets clear. You would not want to see this RSI indicator go under the 50 level before you would even consider any kind of reversal or anything in. This is the yield. This is the rate. This is the percentage return or amount you have to pay depending on who you are. And your longer term levels are not. Let's get some perspective here. You know, maybe come back, retest the last swing 886. Probably should even get the monthly on here. Just clear it up. What's that? It's 30 years, 40, almost 40 years of data. Okay, downtrending rates of 40 years. Have we broken out of that trend? Yes, we have. Where can we go? Well, just minimum go off the last previous high. What's that 886? Somewhere around 4.75, 4.8. That's one possibility. The other possibility, look, if the last move down was some kind of shakeout, which it was, secondary test goes slightly below the prior low, then it becomes a 1618, becomes like a shark pattern off of that 2002 prior peak. Think of it as this is the shark, the 21st century shark. So we take all of the data just for this century from 2000 to 2022. What are we dealing with? Really just the all-time, the high for the century, which was 06, the immediate low at 11, then your midpoint there. What was that? 18, 19. Yeah, there's your midpoint. And then down, back down to a nominal new low. That's a shark structure. Gets you up to a 1618, 886. Almost perfectly, notice. Yeah. Not surprised to see that to go to about 4.65, 4.7% on your yield. So if you're hoping that the yield is going to stop going up, unlikely. Not until these longer term levels are hit. And that daily chart, yeah, anything above, if we get to 3.5, 3.52%, it's gone. I mean, you'll shoot a gap, over 100 basis points. Absolutely. We'll know. We'll know. I mean, there's really it's the make or break of this changing into something larger is threatening now. Uh, by next week, who knows? Monday next week, Labor Day, I believe. Let's look at the calendar. Yep. So no show Monday. I'm off most holidays if they coincide. And I think it's important that we continue to stay on that interest rate chart. Let's take a quick peek at Ethereum right before we get out of here. Listen, we need to see fireworks. Otherwise, I will stake it under these lows. Okay, we got major problems, and we still have got problems. Okay, but in terms of it taking more time. But if these large patterns that we have been following since June are going to yield us anything more than what we saw in the last 4 weeks, forget about it. There you go. I do think Ethereum's the chart to follow, and then Binance Coin. But crypto space, look, it's going to take time, no matter what. If this is going to wash out, you'll see it in the next 48 hours. We'll be back tomorrow, folks. I think this is going to be a hell of a week. Either way, let's stay on top of it. Join me tomorrow. It's been a great one. Thanks, everybody, for showing up. Until then,